We're half an hour from the open in Hong Kong, Shenzhen and Shanghai. You're watching The China Show. I'm Rebecca Choong Wilkins with David Ingles.
Let's get to your top stories today. Tencent and CATL deny having ties with the Chinese military, saying that the U.S. made a mistake by adding them to a Pentagon blacklist.
And the dollar trims losses after Donald Trump says his tariff policy won't be scaled back, while Asian stocks get a tailwind from Wall Street's tech rally. Investors are looking ahead to a speech from Nvidia's Jensen Huang in the next hour.
Yep, that's going to be a very big one. And we look at the possible contenders to succeed Justin Trudeau, who's stepping down after 9 years as the Canadian Prime Minister. Welcome to the show. Hope you're all well. Good morning. Good Tuesday morning from the Asia Pacific. The story across these markets is a U.S. stock market at record. Futures are continuing, as you can see, to push higher. 6,000 in S&P futures. The dollar is bouncing after really one of the worst days on both dollar gauges, whether that's Bloomberg gauge or the ICE gauge, worse in about 6 weeks or so. So just about across the board, with the exception of likely markets in Hong Kong because of the Tencent story, which we'll get to in a moment here. Yields, as you can see, are flat in the Asian session. We're seeing pickup on yields across the Asia Pacific on the back of the melt that we had in the U.S. with the Japanese 10-year at 1.142. The 30-year, in fact, in Japan is now at highs in 14 years. And yep, as you can see, we're coming online in Taiwan. That's 1.7 after percent, a very strong session in Taiwan. Yesterday, and a reversal, as you can see on the Nikkei 225, after the catch-down session that we had on Monday. Okay, your big story, the big stock to watch, Tencent, 8% drop overnight in the U.S. That's what we did. And if we do see the Hong Kong listing fall by even close to this, would be the worst day going back to 2023. Watch for that, and I would imagine that's going to be a very, very big drag on the benchmark today. It's the heaviest weighted stock on two of the four major benchmarks here in Greater China. Very quickly, A50 futures doing this. Top, you have the 2-year, the 10, and the currency. The 2-year yield near that 1% handle. Of course, we're talking about this equity market that has yet to actually register a winning day onshore. So CSI 300 down for 4 straight days. Turnover yesterday was the lowest in September 27, I believe, or 28th. 3-month lows in that effectively since, well, that was the same week that the PBOC came out with that massive policy pivot, which kicked things off. Dollar China, unchanged currently, which is obviously, Rebecca, one of the things we'll be tracking given the PBOC fixings that have been fairly material as far as the market conversations have been recently.
Yeah, absolutely, David. I mean, we came into this year just thinking about that yuan story. We came in yesterday thinking with expectations from traders that we were going to actually come in with that weaker fixing, 9.3. That would be a significant step change. Instead, we saw this really strong fix coming through, suggesting authorities are not yet ready to start some of that weakening. But elsewhere, as you mentioned, we are looking at Tencent, CATL, the big names here really for today, particularly that drop in Tencent. Again, the CSI 300, we've opened with 4 days of losses so far. We're keeping an eye on that level on your screen, which is the bottom end of the range, just before that stimulus push we saw going into September, October, the rest of the year. There's a question now whether or not, David, that we see any kind of intervention. One story did catch my eye overnight. Reuters reporting, citing unnamed sources, that the stock exchanges have asked some large mutual funds to, pull back a little bit on their trading. This question of whether or not we see authorities willing to intervene a little bit more to try and repair some of these losses in stock markets. Yeah,
and we have really good guests coming up on the shows, right? So we had Becky Leo from StanChart joining us, I think, at the top of the next hour. She'll be one of the questions we'll be posing to her is how present officials have been in the FX and rates markets. And of course, at the bottom of this hour, we have someone, of course, who recently went long on Tencent, hedge fund there, and we'll get their thoughts on whether or not they are seeing, of course, some presence in these markets. Tencent indicated sharply lower, $49 overnight. I'm looking now at quotes in the early goings of Hong Kong at 380 Hong Kong dollars a pop. So that's about 6%, give or take. from the last close. Let's get the details here and bring in, of course, our team to talk us through this. 2 weeks, of course, before Donald Trump takes office, both companies denied. They said, nope, We don't have any connections to that. Min Lo, our China correspondent, is here with the details on what we know so far.
Yeah, so this is a law that was sort of a blacklist that was put in place in late 2020 when then President Donald Trump wanted to prevent U.S. investments into these Chinese companies that are either controlled or owned by the Chinese military. So now the Department of Defense has listed an additional few companies into that list, including Tencent, but also battery maker CATL and Hotel Robotics, which is a drone maker. And of course, Tencent has put out a statement saying that this is clearly a mistake, that they do not supply to the military. They will be working with the DoD to clarify any misunderstanding here. That's similar to what we heard as well from the other company, CATL, saying it's also a mistake that they are a private company that was taken public back in 2018. So, of course, we're tracking the stock very closely because, David, as you said, it is the heaviest weighted stock in the MSCI, 16% of that index. So any outsized move there will really weigh down on the broader index. And, of course, question is whether Tencent can recover from this, because in the past, there has been companies like Xiaomi, for instance. Hesai is another one that has managed to get themselves off that blacklist. So that is still a possibility as well.
Okay, here we go. There is somewhat of, I would imagine, fairly consequential breaking news right now. So on Wednesday, officials from the NDRC, China's Ministry of Finance, and the PBOC, does the team sound familiar to you? We'll be joining this briefing on Wednesday. We'll see whether or not markets react to this. Once you get, here we go. China will be briefing on a trade-in program, on the scope of that program from Wednesday. So watch appliance makers and some of your consumption places as we go into the open today. Something to talk about, certainly. But yeah, Rebecca.
Yeah, that all-star meeting. We were just talking about our authorities going to intervene. What are they going to do this week? But
the Avengers.
Min, so just sticking on some of the risks that China have, back on this topic of geopolitics, you know, it's not the Tencent, CATL, they're not the only companies that have been caught in the crosshairs here. Tell us a little bit about TikTok. We are seeing videos with millions and millions of views advising young people how to get around this potential ban that's coming in. What does that mean for U.S. tech companies, and how are they implied in this?
Yeah, we are seeing all of these, a flurry of videos on social media. That's because the ban is supposed to kick in on January 19th. That is if the court hearing this Friday doesn't overturn that rule. So a lot of content makers are sharing videos about how to circumvent this potential ban, for instance, by changing your smartphone settings or by logging on through a virtual private network to make it appear as if you are accessing the app in another country where TikTok is not banned. Technically, this is sort of legal because the law actually puts the onus on companies to comply with the rule, or they could face billions of dollars in fines. So companies like Google, like Apple, they will have to remove the app from the App Store and also stop hosting TikTok servers.
Bloomberg's China correspondent Min Lo there with the very latest. Now, sticking on this theme of geopolitics, U.S. President-elect Donald Trump has denied a report that his aides are considering narrowing his tariff plan so that it would only apply to limited specific critical imports. Now, for more, let's bring in Bloomberg Breaking News managing editor Derek Wallbank in Singapore to explain a little bit of what we're seeing. Now, part of Trump's strategy relies on the belief that there is a real threat here. But of course, with some of these moderates that we've seen in Trump's team, there is this question about whether or not we'll see a bit of that pullback, a bit of that moderation. So I wonder, Derek, how disruptive are these contradictory reports, the leaks that we've seen in the past coming from Trump, his team, and this Washington Post report?
Well, Rebecca, I think it's a very interesting question. I think it really does, the whole episode emphasizes the point that Donald Trump is the person who makes policies in the Donald Trump administration, right? In a Biden administration, for the last 4 years, the world and market traders and world leaders have gotten used to the idea that if you saw a story in, wherever you may see it, that says that aides are preparing insert strategy here, you could fairly assume that that was going to be the policy, because that would be, the precursor, the prelude. For a Trump administration, aides can work on all manner of things, and it may come in all manner of seriousness. You have to take this as serious as a heart attack when it comes out, because it may well be the thing that comes up. But the final decision point is Trump, and that is going to be a meaningful change. It's going to have a certain amount of increased volatility as you're looking at all of these currency trades over the next 4 years, and policy decisions and all of that other stuff. So that is going to be a really major change, and I think that question really does get to the heart of a differential that we're going to see over the next 4 years. Now, if you're looking at this policy specifically, Trump has made very, very clear that tariffs are going to be a major part of his administration. He's threatened them on any number of nations. He's threatened baseline tariffs of a certain amount. He's also threatened very specific ones directed at specific countries that have had various destabilizing effects. You should expect a lot of this going forward. I do think that markets are looking for a clear outline of where all of this is going to be and what, sort of the guardrails or the edges of this tariff policy are going to be. Trump has not said so yet. Indeed, failing to say so may be intentional.
And Derek, does it change? Well, I mean, to Rebecca's point, right? The threat of, how markets interpret what comes out of Donald Trump is predicated really on the threat of the counter, or the threat of how serious he is here. Does it change, or does it even bring forward the timing at which he actually implements these tariffs, Derek?
Yeah, David, I think we're not quite sure on a lot of the timing. There could be some things that come as day one items. I think that's the first thing to watch, right? Later this month, January 20th, what comes day one? Or let me use the word day one really loosely to say maybe like the first week, right? What comes then? And I think that's going to be one of the first keys. And then what sort of held open as a negotiating tactic? That's going to be, I think, one of the critical things to watch in the coming, let's say, next 2 weeks to sort of see where we're going there. At the same time, I mean, look, you don't even have to have the levy of it. Just the simple threat is having destabilizing impacts. I mean, just look at the U.S.'s neighbor to the north in Canada, where a threat of a 25% tariff and how Canada can respond to that has been a destabilizing factor playing toward the resignation of Prime Minister Justin Trudeau, right? Canada right now is having all sorts of difficulties figuring out who is going to be the person or the team that is responding. You're seeing a broad sort of range of responses, ranging from individual individual location premiers dealing with Trump as well as other people in his orbit. The idea of, is Trudeau going to be the person to push back? Donald Trump and Trudeau have not had the best relationship. All of that winds up being quite severely destabilizing there. You can only imagine how China is looking at trying to stop or to minimize the threat that of tariffs that Trump has talked about placing there, while getting ready to potentially respond if they need to.
Derek, fantastic. Thank you so much. Derek Wallbank there, live for us in Singapore. As Derek was pointing out, Justin Trudeau, of course, announcing after 9 years. Here's what he had to say.
I intend to resign as party leader, as prime minister, after the party selects its next leader through a robust, nationwide, competitive process. Last night, I asked the president of the Liberal Party to begin that process. This country deserves a real choice in the next election, and it has become clear to me that if I'm having to fight internal battles, I cannot be the best option in that election.
And our Vancouver bureau chief joins us, Thomas Seal, to talk us through it. Thomas, as we heard there from Justin Trudeau, the process has begun. Talk to us about the front runners at this point.
Yeah, what a great segue about Trump destabilizing, administrations around the world. The front runners, I mean, it's really early days, as you saw from Trudeau. The process has literally just kicked off. people's names are now circulating in the press. We are seeing chat about, obviously, Chrystia Freeland. This is Trudeau's, up until last month, longtime deputy, trusted finance minister, saw through leading the negotiations on NAFTA, what became the US, Mexico, Canada trade agreement under that last Donald Trump administration. She dramatically resigned last month and destabilized the Trudeau cabinet. You could draw a line from that to his resignation today. Her name is definitely in the mix, and she's had an on-the-record endorsement from one MP. Mark Carney is another name that is frequently mentioned, former governor of the Bank of England and Bank of Canada before that, now in private sector, and he is an advisor to Justin Trudeau. I think a challenge for, and other members of Trudeau's cabinet are also mentioned, but a challenge for them is going to be running against Trudeau while endorsing the Liberal Party, because there's a deep unpopularity in Justin Trudeau that's accumulated, grievances, some of which are globalized but are borne by the party in power. And so that will be the challenge for them, because there's a 20-point polling deficit that they're facing against the rival Conservative Party. And whoever wins this is going to face an election almost immediately.
Bloomberg's Vancouver bureau chief Thomas Seal there across that story every evening, every dinner time since news has broken for us. We do have to note that Mark Carney currently serves as chair of Bloomberg Inc., among his other business and philanthropic roles.
Yep. Okay. Just back to the China story now. The fixing. Okay. Three things very, very quickly. Fixing's out 718, 79. Some variance there. A little bit of a weakness coming through the last few minutes or so. That's number one. Number two, this tug of war between bulls and bears today. So it was past tens. We'll see what happens in favor of the bears with the Tencent and CATL story. Both, well, Tencent is the heaviest weighted stock in many benchmarks in Greater China. CATL is the second heaviest weighted stock on the CSI 300. Tencent indicated substantially lower right now. But to point number three, the NDRC, the PBOC, and the Ministry of Finance will be joining that briefing on Wednesday to talk us through this consumer goods trade-in program. So more on that in a moment. The opening bell 13 minutes away. You're watching The China Show. Good morning. Right, welcome back. You're watching The China Show. As my colleague John Ferry was pointing out just there, in case you heard that, we're counting down to the jobs report. We're also counting down here, this part of the world, to the initial pricing on Tencent. Should be out in 5 or so seconds from now. Let's bring in Mark Cranfield from our MLive team to talk us through, Mark, this likely drag we will see from Tencent today across Greater China.
Yeah, I mean, when you're put on a list by the U.S. Defense Department, that's pretty serious. And obviously we saw a huge decline overnight, 8% drop for the Tencent ADRs on very big volume as well, much higher than usual. So that's pretty negative. And it's the second largest stock in the Hang Seng Index. So it's very difficult for anyone to ignore the impact of that when they start trading today. If you look at the ADRs, they've traded all the way back now to where they were in mid-September when China first started all the stimulus talk. Well, the Hang Seng isn't there yet, but if Tencent really drags the market down today, people will be thinking there's a risk that all of the stimulus rally from September is going to get erased. That's a pretty damaging start to the year for everyone in Asia, especially in the Greater China markets. Of course, they've just announced that there's going to be a big meeting tomorrow, press conference 10 a.m. Wednesday, which people will be thinking there's a chance of more stimulus talk there. But in the near term, yeah, it's all about Tencent and just how far they might bring the market down today.
Yeah, Tencent plunging about 7% in pre-market there, we're just noting. Thinking a little bit more about some of the geopolitics at play, this will he, won't he tariff question with Trump that we've seen overnight. Tell us a little bit about some of that whiplash that we've seen in currencies, what this means for the US dollar.
Yeah, so it's a nice bit of deja vu for us here in Asia, those who can remember 2018, 2019, back to those days when first thing in the morning we get used to tirades from Mr. Trump and what he was doing to various people, particularly to China. So he seemed to have a preference for doing things just about the time that the futures markets were getting started in Asia, which is somewhere around the 6 a.m. mark. But certainly between 6 a.m. 7 a.m. Hong Kong time, you can expect that things are going to get pretty jumpy. And we got a nice taste of that yesterday. There was a story that First of all, Washington Post reported that he was going to make his tariffs a bit more specific. Dollar went down and dollar went all the way back up again. And it's gone even higher, particularly against dollar yen, when Trump said, no, that's not the case. Tariffs, as I previously indicated, it's going to be tariffs for everybody, and we're going big on those. So something could easily change on that, and we're going to have to get used to the fact that every day there's going to be back and forth from Trump, from Musk, from other people in the US administration, and that most of these are going to be sent out before there's too many details as well, which makes it even harder for traders. So if you like trading headlines, if you're a foreign exchange trader that thrives on short-term moves, this is your time. Next 4 years are going to be great.
Yeah, well, I think for Asia, come in early, unless you're in Tokyo and Sydney. Mark, fantastic. Thank you so much, Mark Cranfield, in Singapore for us. On more of the geopolitical breaking news right now. Okay, so Mark Carney says that he is considering running for the Liberal leader in Canada here. That's according to an emailed statement from his spokespeople team. Just to note as well that Mark Carney, of course, currently serves as chair of Bloomberg Inc., among his other business and philanthropic roles. Plenty more ahead. We'll leave you with a look at markets. We're down 1% on the Hang Seng Index, 7 minutes at the opening bell. This is Bloomberg.
Welcome back. We are here with the China show. Stocks to watch. We are looking at these big two players. Tencent down around 7% in pre-market. CATL following close behind 5.36% so far. I'm just looking at some of my traders in the WeChat group saying that Hong Bao's are going to be another light year for Chinese New Year.
if at all, there will be something in those red envelopes looking at how, to Mark Cranfield's point earlier on, I'm juggling up my marks here because of the news flow. This could actually undo most of the rally we've seen, given that these two, just for context, right? Tencent is the biggest Chinese company by market value. It's the heaviest weighted stock on the Hang Seng Index and MSCI China. CATL is the second heaviest weighted stock on the CSI 300. So those immediately will be a drag on the benchmarks themselves going into the open today.
And there's sort of some discussion about whether they can negotiate that it truly is a mistake. But the problem is that does take time to have that discussion with the DOD.
Yeah, and is that a discussion that the markets will listen to over the shorter term? And as you can see, they're selling on the news. The opening bell, 3 minutes away. You're watching the China Show.
Welcome back. You're watching the China Show. We are counting down to the open of markets here, David. And look, it's Tencent, CATL dominating the day. I keep thinking that, things are going to kind of pep up a little bit. 2025 is going to be a little happier. No luck yet. Yeah,
given the headlines that Rebecca just alluded to there, the initial script we were going with today, and they talk about live TV, right, was the CSI 300 was down for 4 straight days, and we thought that was the bad news, right? So we're throwing out that window. We're going to get the open today. Do expect some substantial pull across these benchmarks in the opening bell, in the opening minutes, particularly when it comes to Tencent. But we'll get to that. Here we go with a mainland open in 5, 4, 3, 2, 1. Change it up. CSI 300 on your screens. Shenzhen Composite, Shanghai Comp down about a fifth of 1%. CATL, bottom of your screens. Bottom row, second from the left, we're down about 5%. And the headline says it all. The U.S., of course, adding those two there to that blacklist. The two have, of course, come out and said, nope, we don't have anything to do with the Chinese military. Markets are first running with the story, and then we can talk about, I guess, where we settle as far as this is concerned. The other bit, of course, to this is the Hong Kong Open. We were down as much as 0.9 of 1%. It's the opening bell. Let's give it a few minutes. HS Tech is down 1%. MSCI China, where Tencent is the heaviest weighted stock on MSCI China, we're down about 1.3. Tencent also bottom left, leftmost side, 5.4. to the downside. We were down 8% on ADRs. Again, I would expect substantial volumes coming through in the stock today. More on that in a moment, but just very quickly in terms of just a big picture, CSI 300 with the losses so far, 4 straight days, maybe a 5th, maybe we close below that blue line on your screens, which is 37.65, which is the level we're tracking, which was the low, of course, of the recent range, which, fittingly enough, thank you to the news gods here, that big pop you see left side of your screens was when the PBOC and various ministries came together, that live briefing, of course, and that jolted markets on the way up. And we're now hearing that roughly the same group, the PBOC, the NDRC, and the Ministry of Finance will be holding a joint briefing tomorrow specifically, I think this is the caveat here, specifically to talk about this consumer goods trade-in program. We'll get more on that in a moment. Markets, though, are either range-bound, or if not, moving to the downside here. Rebecca.
Yeah, thanks, Dave. And just to touch on some of these big tariff themes that we really started the day with, thinking about Trump, thinking about this whiplash. Canada now apparently mulling the early release of retaliatory tariffs on the U.S. That's according to local Canadian media. Globe there will obviously keep continuing to keep an eye on that story and how these tariffs and the back and forth, the whiplash, the retaliation rolls out across Canada, the US and other North American allies. But sticking on that China story, and of course the geopolitical story, let's bring in Wong, founder and co-CIO at the Singapore-based hedge fund APS Asset Management. Now, look, it takes a lot of moxie to trade China these days. You are a solo China-focused fund. You've outperformed most of your peers over the past 3 years, according to Bloomberg calculations. What is it that you're doing differently from everyone else?
Firstly, I think we invest for the long term. Look at the long-term trends that are taking place in China. At the moment, I think most investors are facing on the problems faced by China. Yes, we do concede that China has been facing multiple headwinds. But that said, China also is facing a lot of tailwinds. So we try to look at China objectively and invest in stocks or companies that represent the future of China rather than yesteryear stocks.
Yeah, well, one of those companies, and I'm looking at, and I hope you can talk about December in a moment, but this is your November fact sheet. Your recent new position as of November, and the reason I bring this up, if you're going to show Tencent, today is down about 6%.
Yeah.
You initiated position Tencent, and effectively, just for our viewers here, because it's best placed to benefit from a stimulus-driven economic recovery. To your point, the new China, new tech. Would you buy this dip? How are you managing your exposure to Tencent these days?
We have just built a small position in a stock. With a share price correction, most likely we will add to the position. Because reading the news this morning, actually, I was thrown off balance. And was also amused that Tencent made it to the entity list. Right? When you look at Tencent's business model, right? They have video games. And then, of course, the social community app, WeChat. And maybe a new business, e-commerce. So this morning I was trying to get my head around the threat that Tencent is likely to pose to the U.S., and I couldn't. But after maybe this interview, I will have a chat with my analysts to find out whether, Tencent's earnings will be affected, by being included on the list. I don't think it will, but we cannot be certain. Maybe I should add a very interesting point.
Please.
In U.S., there's a joke going around the business people. If you want to make it to the entity list, do very well in what you do, and you will attract the attention, either of the state administration or the Pentagon or whoever in the U.S.
So maybe it's a question of just staying under the radar a little bit.
Yes. Then you attract a lot of attention in the U.S. that you are really very good in what you do. And therefore, You got promoted to the list.
So part of, I mean, you talk about Tencent, part of that is this, your conviction that we're going to see consumption coming back, stimulus coming back. Do we need to see this big bazooka stimulus that so many investors have been calling for?
I think, the government, had the bazooka stimulus plan during Wen Jiabao's time, right? Which created a lot of excesses. So this time around, I think the stimulus plans will be more targeted. Just like, for instance, the trade-in policy that was initiated a few months ago, which I think is likely to be expanded this year into new product categories like smartphones and so on. So I think, the stimulus plans will continue to be very targeted. Yeah, so you should not expect the bazooka-style stimulus plan in 2008, I believed.
I mean, one challenge with withholding that bazooka stimulus is the difficulty in restoring confidence in China. What do you think is the biggest challenge for China's business community for 2025?
Very true. At the moment, business confidence is very low, including even consumer confidence. So I think a big task for policymakers in Beijing is to restore some confidence. So they come up with this trade-in program. And two, PBOC Governor Pang Gongsheng said in September 24th, I'm sorry, that he will provide about 500 billion yen to non-bank financial institutions to buy stocks.
Right.
And another 300 billion yen to listed companies and their shareholders to do share buybacks. And then he interestingly added that if those amounts are not enough, I will have now 2 more rounds of similar amounts. So I think one of the strategies is to boost the stock market so that the negative wealth effect that China has faced in the last maybe 3 years or so would be reversed to some extent. And therefore, in the last few months, things are still not very upbeat yet, but I think some investors are feeling a little more relaxed, believing that things should improve gradually. That's why last year the stock market actually done quite well, right? Although most people's perception is that we are still in a bear market.
Well, are we?
I don't think so. The market last year was up what? In the high teens? But most people...
Well, at the peak.
Yes, of course, from the peak.
Right.
It's down maybe 40%.
We traced 15% from the peak.
Yes. So I think the recovery should continue into this year.
Right.
Because I think there will be more interest rate cuts. Macro data should improve this year. Maybe not all macro data. I think we can expect about maybe 70% of economic data for the whole year to be better than last year.
Right.
Bearing in mind, the last year was a very bad year, including earnings. And therefore, there's a good chance that earnings this year will recover 10% to 20%. And because the P multiple is currently very low, so I'm expecting PR expansion somewhat, and together with earnings recovery, I think the stock market can go up 15 to 20% without much difficulty. Partly also because this market has been very oversold. I've never seen investors, both domestic and international, to be so bearish.
And a lot of it for funds like yourself. So let's say we perform 15% with our eyes closed. It's really about delivering alpha for someone like you and delivering gains in excess of that as well. I'm wondering your opportunity set of companies. You look for companies with, for example, durable growth prospects, right? So I'm thinking about sectors like EVs or solar, where there's still immense price competition. Are there opportunities in those kinds of sectors, or do the economics still not work in favor of, having a more visible earnings outlook?
Yes. Even in the high-tech industries, depend on the industries. There are some industries like solar cells, which is immensely competitive, and because there's also excess capacity, we have stayed away from those sectors. But there are many stocks in the high-tech sector. So we like stocks in the in semiconductors. In EVs, we have stayed away from the car manufacturers because of the ongoing price competition, which is weeding out the weaker players. Instead, we have a position in the component manufacturer, a high-quality component manufacturer, which has done well. We also have a position in this satellite big data service provider, which has got also expertise in this low-altitude economy, which is a new industry. So there are, stocks in the high-tech sector that are growing at very high rates. Like, for instance, the company that I just mentioned is Jovis.
Jovis Tech.
Jovis Tech, not a very big company yet, but has grown at 40% a year, top line and bottom line. And based on the research that we have done and multiple conversations with the company, we think the company can still grow at 40% a year for many more years to come. So there are, stocks that are very interesting. Maybe I should also add that because of the bear market the last 3 years, there are many deep value stocks, really cheap, right? And they're selling at a fraction of the underlying intrinsic value. And because there are so many of them, we are very picky or choosy. We pick those, they pay high dividend yields, like 7%, 8%, or even 10%. So I've never seen, so good value in Hong Kong, in China, and even Hong Kong in the last 20 years.
They do say it's the opportunity of a lifetime. And I had a look, I think, a few months back. There are stocks that trade with a lower PE in Greater China compared to price to book in the U.S., just to show you really how distorted the valuations are. Two of your biggest holdings based in November, let me just have a look at this, China Life and the semiconductor play SMIC. Well, my questions for both is, so as SMIC, how have you managed that position and why? And China Life, yields have been falling. So I'm wondering whether government yields have been falling. And I'm wondering whether that's actually a negative for holding such a big position in an insurer, which actually gets a lot of its income from the market.
First, SMIC, the market cap today is about $50 billion, whereas TSMC, which is the best foundry in the world, without doubt, is valued at more than $1 trillion. Yes, there's a gap between SMIC and TSMC, but over time, I believe SMIC will catch up.
So we are very. That's a bold call.
Yes, as I said, we invest for a long term. See, remember that in technology, you need 3 or 4 things to be successful eventually. One is money, because it requires huge capex. One semi plant will cost you easily $10 billion. Right? SMIC has the capital and also has the support of the Chinese government. 2, there's enough engineering talent in this country. Every year, it produces more than 5 million graduates. 3 is a huge domestic market. It does not need to worry whether or not it can sell to U.S. companies. By just selling alone, in China alone, it can make a very good living. So we are convinced that the gap between SMIC and TSMC will narrow. It has narrowed and will continue to narrow. So what it lacks is probably, the EUV lithographic equipment. But as soon as one Chinese company successfully develop the EUV lithographic equipment, then the chip war will end. And I'll make a prediction that within 3 years from that day, maybe half of US semi companies will get into big trouble because no Chinese company will want to buy whether equipment or chips from US companies. They buy mostly from their own companies. Now on China Life, it's a deep value stock, selling at about 0.25 times embedded value. So the correct way to value a life insurance company is to use this metric, price to embedded value. Now, most life insurance companies anywhere in the world will sell above 1 time. But in China, it's very strange. They can sell at 0.25 times embedded value.
Okay.
I've asked some of my friends in the life insurance industry who have worked as CEOs of life insurance companies. He also could not explain why China Life will sell at that kind of valuation.
Thank you so much for the time. I think we can continue the conversation, certainly. It's nice to see you and let us know next time you're in town. That was Wong Kok-Hoi, their founder at APS Asset Management. Of course, their funds outperformed their peers over the last 3 months and years. So, by the way, speaking of chips, someone else is coming up to talk us through. Maybe this is important. We'll see. Time's on your screens. Jensen Huang later on in the show. This is Bloomberg. Welcome back. Some news we're following from China's property sector. We're looking at shares of Sunac China here after they tumbled Monday, of course. That's after it reportedly told some of its dollar creditors it's unlikely to meet this September bond maturity deadline. Now, Reuters citing sources here that saying the company will explore options for the maturity as uncertainties over the sector recovery weigh on repayment efforts. Meanwhile, Logan Group says it has reached an agreement with some offshore creditors over a long-term or longer-term sheet here for its offshore debt restructuring proposal. Now, a statement to the stock exchange says that the proposal aims to relieve debt burden and restore the capital structure. The company owed about, get this, $8 billion offshore. That's as of Monday, Rebecca.
And even as Beijing vows to stabilize housing prices, the developer China Vanke remains in this pretty uneasy spot. We have some investors worried that the country's largest privately held builder is near the end of the road. Now, Bloomberg Opinion columnist Shuli Ren joins us to explain why she thinks Vanke's year of reckoning is finally here. Shuli, talk us through what we're seeing and tell us a little bit about what this tells us as where we are in the cycle. Last year you were saying, Vanke, we can't let it fail. Beijing isn't going to let it fail. Now we're in a very different place.
Yes, absolutely. I mean, on its own, the market consensus is that Vanke cannot survive by the end of this year. It has about $5 billion bond due this year versus just over $1 billion last year. And the question now is whether Beijing has incentives to keep it alive. And unfortunately, like what you said, Rebecca, China's housing market has moved on to a different cycle. Last year, privately held developers were still important. People still looked at them as barometers to test how healthy the real estate market is. This year, people have moved on. I mean, if you want to buy brand new flats, you go to state-owned developers like Ho-Yin, China Resources Land. But if you want to go into the secondary housing market, which can be a little bit cheaper, you go onto online lists like classified ads and buy from individual sellers. I mean, look at the China primary market property sales. It's down like 60-70% from its peak, right? And at this point, there's just not much space for privately held developers left.
Yeah, and a lot of that comes down to oversupply, which we know is a massive problem. What is, I wouldn't say stopping, but what's the biggest challenge right now that China has in front of it to address that issue?
Yeah, I mean, ideally, to do the housing rescue, you want to stimulate demand and curb oversupply, right? And China's focus clearly is stimulating demand, cutting mortgage rate, lowering home buying restrictions. I think the problem is politics or political economy. I mean, in smaller cities, there has been no land transactions or new property sales for quite a few months. And then if the local officials say, I'm going to repurchase the land and the flats from you, what's the prevailing market price, right? There is some talk of using a cost-plus model. But as Elon Musk knows, cost-plus has a lot of gray areas, right? And then President Xi Jinping keeps on talking about anti-corruption. Local officials are just not willing to stick their head out and say, okay, I'm going to buy this plot of land for $1 billion.
Julie, thank you. You can check out Julie's column, of course, on the terminal. Julie Renner, Bloomberg Opinion columnist. Back to markets very quickly. We talked about Jensen, Huang, and the next hour, of course, and the likely events there. So Nvidia, for example, closed in at a record overnight. Chip stocks, as you can see, feeling those tailwinds coming through across that space. We're up 10.3% on Tokyo Electron. And as you can see, the rest of this. And interesting, of course, in case you missed it, our previous guest, whose hedge fund outperformed most of their peers recently, one of the top holdings is the second company you see on your screens, SMIC. And quite a bold call coming out of the company that in a couple of years they actually see SMIC being at par, if not catching up. Close conversation with the number one in the world, also happens to be top of your screens, to TSMC, up to 2.5% there over in Taiwan. Right. The story across Chinese markets, though, very briefly here, is a benchmark that is coming off lows of the day, if not already higher in the case of the CSI 300. Hang Seng Index was down as much as 1%, give or take, in the pre-markets. A lot of that has to do with, your big drags, no longer as big a drag as a few minutes ago. Tencent is down only 5%. We were down about 6%. And CATL on your screens very shortly, also coming up there, also coming off lows of the day. We're down 3%. On that. Chinese one-year yield, we're closing in on that 1% handle, the 10-year yield, and we'll be having this conversation later, of course, with Becky Liu at a Standard Chartered. She'll be talking about all things FX and rates and all things geopolitics, Rebecca.
Yeah, I mean, we couldn't really have asked for more news today. We thought we were going to be talking about Trump tariffs, all that whiplash that we woke up to, this 4-day slump in the CSI 300, whether or not we would see that turnaround. And actually, we've been taken over by the news. Tencent, CATL, as you say, really dominating. Yeah, dominated proceedings. And I think to the point that Rebecca was also making there, that the other headline that snuck itself into our rundowns today was this briefing that takes place tomorrow. If you're curious what that is, I'll tell you in a couple of minutes. This is the China Show. Good morning. Welcome back to the China Show. We're entering the second hour of the program, half an hour into the cash market session on the CSI 300 on your screen. So, it's a story of two big stocks, which we'll get to in a moment. And, of course, there's a bit of macro news coming through as far as China goes. And possibly we'll see what they announce this joint briefing tomorrow. MSCI China's down about 1% in the first 30 minutes of trade. This maybe get more details on this trade-in program with greater scope. But, yeah, it's really a story across these markets of a rising tide, and that goes well with government bond yields, which are tracking the move in treasuries overnight. Well, at this point, for more on that story, and of course, co-piloting the rest of this hour is, of course, Belle, who's here with us in our studios. Belle.
Yeah, well,
yes, you are.
I am here.
There you are.
and it's actually a really good hour to be here today because there's one man who could drive market sentiment.
Well, thank you. Who else is that?
Oh, yeah. Sorry, there's two men. We've got one here. And the other one, of course, is at the CES trade show. And if you haven't figured it out, it's Jensen Huang. He's going to be speaking this hour, and there's really a lot of expectation around that. What's he going to be saying about the Blackwell chip commentary, for instance? But also, is it going to be enough to spur confidence in the AI theme and to maybe spark the next leg of the rally? So that's really one thing to be watching at the bottom of the hour. But in terms of the markets today, as you said, it is that story of rising tide lifting all boats. It's the story of tariffs.
Yep.
And is it going to be something that's just only on certain sectors or certain industries from the US? Is this going to be something that's more broad-based? Donald Trump, of course, is really walking away from that select report, but still markets seem to be trading off that sentiment this morning.
Yeah, I mean, to Bill's point, right, a stronger dollar is back after the sort of pullback we had overnight. The stronger yield story with the 30-year yield, we talked about that at, what, a 14-month high. 5-year forwards of the 1 year, for example, back to the highest since 2023. This U.S. exceptionalism story showing up, and again, we circled back to the Nvidia story, where you had a U.S. market which closed again at a record overnight. And you did have, you had a rally in the U.S., and then Nvidia did close at a new record of close to $150, and within striking distance of regaining the top spot as the world's most valuable company, within a whisker, really, of re-overtaking Apple. So, yeah, lots of themes which could actually deliver, to your point, over the next 60 minutes, Bill.
Yeah, and then sort of around that tariff and around that tech story, it's also what's happening in terms of Tencent and CATL today, because this was really the big story overnight. We had the US blacklisting both of these companies for their alleged links to the military. There was quite a severe market reaction on Wall Street, at least for Tencent, because the ADRs are there. Today in the session, again, you've kind of pulled off those intraday lows so far, but it's really that assessment of how serious is this going to be, and is it something that these companies, a list that they could actually get themselves removed on. But we can get more on that now, of course. Yeah, with Min Min Lo, our China correspondent, with the allegation and also the response from both companies.
Yeah, so this is a blacklist that was created back in late 2020 when then President Donald Trump wanted to prevent U.S. investments into these companies that are either controlled or owned by the Chinese military. And the DoD has now added companies like Tencent, like CATL, which is a battery maker, Hotel Robotics is a private company, a drone maker in China, saying that they are tied to the military. But of course, these two companies have said no. CATL, Tencent as well, saying it is clearly a mistake that they do not supply to the military. They'll be working with the DoD to clear up this misunderstanding. CATL as well, saying that they are a private company. They used to be a private company that was taken public in 2018. But some analysts that we have been speaking to are actually are downplaying the impact of this, because bear in mind that this blacklist doesn't carry any specific sanctions, although of course it does discourages some traders from trading with these companies, but it doesn't actually change the fundamentals of these companies. And you heard earlier our guest in the last hour saying he would buy the dip on Tencent. So the question is whether these companies can rebound from this, and already we are seeing these stocks pairing some of the earlier losses from this morning. So it could be a temporary setback, but we have seen other companies in the past, like Xiaomi, like Hesai, which is a LiDAR maker for smart vehicles. They have been able to get themselves off that blacklist before. Yeah, and actually we spoke to the Hesai CEO about that. We know that China really wants to focus on that self-reliance, and part of that effort, of course, includes trying to reignite the consumer sentiment within the country. So last week we had the NDRC briefing where they announced that they would expand the trade-in program to include consumer electronics, but the details haven't been spelled out just yet. Yes, so I'm very excited every time we have these combined hearings of multiple government agencies, because we have the PBOC, we have the MOF and NDRC holding this combined briefing tomorrow. And as you said, last week, the government signaled that they were going to expand this Cash for Clunkers program beyond home appliances to include gadgets and smartphones. Why this is important is because we have been hearing from analysts so many times that this Cash for Clunkers program, it is at some point going to lose steam, because how many times are you going to change your fridge or your microwave? Probably once in a few years. So expanding the scope of that is important. And given that PBOC and MOF are going to be there tomorrow, I'm wondering whether they will actually give us a concrete number, because they have said they're going to issue special treasury bonds to fund the subsidy program. Last July, the government committed 300 billion yuan in special treasury bonds for the Cash for Clunkers program. So how big is the scope tomorrow? Will they give us a concrete number? That's something to watch, especially given we have been talking about how we are in a sort of policy vacuum period until the two sessions. So perhaps the government is stepping in now to just give markets a little bit more signal about the sort of stimulus we can expect. Yeah, and we certainly saw the market reaction off that. You missed it, Dave, but Xiaomi actually hit a record high
off the back of that announcement.
Okay, looks like you have
Although
something
it
to
was
prove here
already-
with the tone you're striking
Look,
there.
I just really enjoy the Xiaomi story watching that
great
story.
story.
Rally.
Yes.
And when that
bummed I
news
missed
came
it.
out and then it reached a record high, I just wished you were
Well, thank God
you
the
were
Bloomberg
here.
terminal does not have historical data, so I can't go back to. So I'll take your word for it.
But keep in mind, though, Xiaomi was already really high even before that news drop. I think it was because they had this high expectation on their EV target.
Yeah, they've been one of the stellar performers over the course of 2024, but they definitely could be one of the beneficiaries of this, and we'll just leave it there. All right, that's our China correspondent, Min Lo. We've got much more coming up on the China show today. Standard Chartered Bank joining us just after the ad break, talking about the PBOC cutting rates faster and deeper this year to battle deepening deflationary pressures. Macro strategist Becky Liu is joining us next. This is the China show. Taking a look at China government bond yields this morning, and it really has just been that story of a sort of a seemingly unstoppable bond rally. And it has been, of course, a challenge facing the PBOC. Adding to that, of course, is what's happening with the Chinese yuan as well. But still, last week, for instance, we saw the 10-year yield dropping below 1.6% for the first time ever. But Dave, some people are saying, this could go a lot further.
Yeah, I think the Lombard ODA Ho-Yin Lee, if I'm not mistaken, called for a 1% handle on the 10-year, which is some way away. But, looking at the move we had in December of, 40 basis points, it's not so far away if you think about it that way. Direction of travel is certainly down. Let's talk about our assumptions and what the working ranges are right now, given the move down recently in yields. Becky Liu joins us, head of China macro strategy at Standard Chartered Bank. Happy New Year.
Happy New Year.
Same story, though. Lower rates. Even lower rates. So what's the new range now?
So we're now looking for 10-year CGB yield, bond yield falling to 1.4% by the end of this year. So it looks quite modest because it's only less than 20 bits from the current level. But the reason is that there will be some internal hurdles preventing the PBOC from cutting the 7-day OMO or the front-end rates extremely aggressively, despite our expectation for much lower inflation and the need to ease further.
And I mean, how concerning is that? Yields at that kind of level, do you think? What's the impact?
We feel that eventually China would need to ease monetary policy even more aggressively compared with the last year. So they have already stepped up the pace of rate cut since the second half of last year, but it's far from enough. So if we look at real rates, it remains far too high. So from a growth perspective, from a credit demands perspective, they need to lower rates very materially in order to stabilize the credit growth. If we look at the overall M2 growth, credit growth are all falling to record low levels, and we need to see a stabilization of that. And lower rate is one of the many prerequisites for that to happen.
Are we seeing any signs that the actions around rates that they've put in place have started to work, for example?
It's slightly better. For example, when we look at the real estate sector, it looks like the inventory level for Tier 1 cities are already coming back down to a level that was last seen at the beginning of 2022. But of course, for the lower tier cities, it remains pretty far away. So lower rate is one of the stimulus that they need to put in place to support the real estate sector. But overall credit growth are still decelerating. And they have talked more about easing more aggressively. For example, they used this word called moderately easing monetary policy stance for the first time in 14 years. And that means more and faster pace of rate cut should be expected this year.
I mean, in what form specifically do you think that, more aggressive easing is going to come in?
We believe there will be a combination of, number one, interest rate cut, i.e. the open market operation rate cut. Second, triple R cut. But triple R cut will soon be hitting its limit. Even by cutting all banks' triple R ratio to 5%, they can only inject additional liquidity of slightly more than 4 trillion yuan, which is not much. And finally, they have to expand the size of the balance sheet. We don't think China is at the stage of QE as of now, but in 2 years' time, that's completely very likely. And indeed, from what we have seen since the second half of last year, they have already stepped up the effort to boost the size of the balance sheet through a range of tools, including direct buying CGB bonds from the market.
But a lot of people will talk about liquidity, and liquidity doesn't seem to be a problem in China. So even with all of these sorts of easing measures in place, does that actually have the intended effect?
Not so much yet. It helps, but so far what it could do is to stabilize the decline in, for example, real estate sector, stabilize the decline in mortgage loan repayment, stabilize the decline in the decline of loan demand. So far, it hasn't really reached a point to lead to a stabilization of credit growth yet, and therefore we believe they need to do a lot more. But it's not only monetary policy. We believe fiscal policy, they also need to do a lot more. So that's why we now actually think they would have to issue government bonds equivalent to about 11% of GDP this year in order to bring back fiscal spending just back to pre-COVID levels.
And these are central government bonds?
It's a combination of central government and local government bonds, and also part of the issuance would be used to conduct debt swap of the contingent liabilities. But altogether, it's going to be a record high, 11% this year versus only 8.5% last year.
Well, I think the follow-up to that is, a lot of people have been debating on what this fiscal deficit number should look like. And my question there is there a big enough number that you think markets will stop, that might stop markets from buying the CGB rally? In other words, the two meetings in March, is that potentially a reflationary event?
We hope it starts to become an event that would prevent inflation from falling further from here. Because at this stage, we still see significant risk for deflationary pressure, especially compared with the current consensus forecast. So let me give you the numbers. The current consensus forecast for CPI is 0.9%. PPI is minus 0.6%. So if we just do something very simple, assuming sequential pace of month-on-month growth, it's the same this year versus last year. And that means headline CPI inflation have to go into the negative territory by the first half of this year. And PPI inflation would have to decline to minus 2.5%. And if we see a replay of 2018, when tariff was being hiked by the US, then headline PPI inflation could go back to the minus 6% territory, which is the lowest level since 2009. So at this stage, we feel that one of the biggest risks remains to be deflation, and market is probably still having too benign a forecast about the inflationary outlook this year.
I think touching back on David's point again, is there anything that you've seen in the policy measures so far that you think are actually working to address the deflationary pressures in the economy, that you're already seeing the impact or you expect to see the impact in the near term?
We started to see some very small impacts. For example, headline PMI manufacturing index is now back above 50 for 3 consecutive months. Non-manufacturing PMI just jumped last month. And fiscal expenditure has accelerated since the fourth quarter of last year. And all these would point to some stabilization of growth in the first quarter or even first half of 2025. And therefore, we are still quite comfortable with our current GDP forecast at 4.5% for this year. But deflationary pressure, it's likely to remain unless the government is unveiling an even more aggressive measure in the coming few months.
Well, I feel we've been asking this question, and let me ask it again. Why don't they do more earlier? If you say, and what you just said there about QE in 2 years is, don't be surprised if we see that. We've heard that from a couple of economists as well. And I'm wondering do you think there's a lack of urgency, or do you think they're confident that these incremental steps will, in aggregate, amount to something bigger than QE in 2 years?
We think that they wanted to do more earlier, but the amount is not enough to completely offset the negative implication from real estate. They probably still underestimated the drag of the real economy and inflation and other stuff from the continued fall of the real estate sector. So they have indeed taken a U-turn of policy stance since last September, but things are only being rolled out step by step. But on the monetary policy front, there are some other hurdles, which would be banking sector profitability. So we have seen NIM compressing to record low of 1.5%, and any future rate cuts would need to take into consideration the ability for the banking sector to protect their own margins. And therefore, in order to cut loan rates further, which would help the real economy, help credit growth, they have to lower deposit rate. But it takes time for the deposit rate cut to transit into actual decline of cost of liability declines.
Just quickly, we've seen the PBOC also giving support for the yuan. Where do you think the level goes from here?
In the short term, we think the simple answer is that it will still be kept under 735. The reason is that before Trump's inauguration, there remains too many uncertainties in terms of how his actual policy will likely to look like. So the Chinese authorities will unlikely to change their current FX stance until then. So we believe that they will be keeping official fixing under 720, which implies the weak band or the maximum increase of $CNH under 735. They will only reassess their FX policy after Trump takes office and after we see the actual action of the second administration.
All right, Becky, thanks very much for joining us. That was Becky Liu, the head of China macro strategy at Standard Chartered Bank, and we'll have plenty more ahead. This is Bloomberg.
Welcome back. So investors are hoping for more upside in shares of Nvidia. Well, as you normally would expect, given really how far the shares have come already, as they await fresh comments from the CEO, Jensen Huang. He is set to speak, in fact, in a few minutes at the closely watched CES trade show taking place in Vegas. Investors will be looking out for any commentary on Blackwell, of course, which is considered the major growth driver moving forward. Despite, of course, seeing robust demand, the chip has faced supply constraints due partly to manufacturing challenges.
Yeah, well, it's all about that demand around AI. And of course, ChatGPT was launched a little more than 2 years ago, but it has become the dominant tech trend. And the theme actually set to reign supreme perhaps into 2025, though it could take a slightly different shape as new applications emerge.
Chips, data centers, energy and spending from big tech. These have been some of the key metrics to understand demand around AI. Now the focus may broaden beyond infrastructure and chatbots to new uses, including scientific discovery.
I think scientists are starting to use it as a tool and apply it in their technology. And by doing that, there's probably going to be a lot more breakthroughs that you'll hear about. But I think that we have, from the public perspective, done a bit of over-indexing on large language models.
Indeed, 2025 could mark a further shift to small language models instead, especially as concerns build over the huge strains that AI is placing on power grids worldwide. That's putting the spotlight on a novel approach to training AI tools that could democratize access to cutting-edge technology.
The new machine learning paradigm will be so-called model over models. What we are talking about is actually a small language models targeting for specific domain. When this decentralized version populated, many more people, many more AI researchers, or democratize, more people will be involved. I think that's very important.
Such an approach could also be critical for integrating AI further into personal electronics like phones and PCs.
I actually would consider this technology to be the foundation for the future that people can have their personalized small language models.
At a device level, there's also set to be a greater focus on what's known as agentic AI, which refers to AI systems that exhibit agency or autonomy.
You're going to start seeing AI being able to do more multimodal, multi-capable things. And I think that the individual might start to feel that a little bit more. They might to see it in their product.
On the regulation front, President-elect Trump could mean less red tape for US tech giants, though that doesn't mean that any lead over China in AI will be sustained.
What we start to see is at the US level, this frontier area of where a select few companies are running away with it, and they look like they're significantly in the lead. But throughout 2024, in China, what we're starting to see is a lot of big, powerful models that are coming out in a more open source community. and the base of China is wider.
The race for AI supremacy in AI is by no means settled as we head into a new year.
And we're going to have more on the outlook for AI just in a moment. Citi's Ho-Yin is telling us why it's set to be the main driver of corporate activity this year. Plus, we'll get his reaction, of course, to Jensen Huang's speech in Las Vegas that we were saying just a few minutes away now, Dave.
Yep. Stay tuned for that. As a company, it comes within a whisker or a whisper, really, you can use both phrases there, of retaining the top spot from Apple as far as the largest company in the world is concerned. Now, speaking of the Nvidia story, it's playing out across Asia Pacific, TSMC, SMIC, all the way down to Tokyo Electron, up about 10.7%. So our market's speculating something is going to be announced, possibly. Or this might also have to do with the fact that Nvidia did, of course, this rally overnight. Anyway, but that's many ways of saying just stay tuned, of course, for that speech coming up in a couple of minutes. The other thing we want to talk about is consumer stocks in China. And, of course, the big headline which crossed about 90 minutes back is this time tomorrow, I believe, this joint briefing. So anytime you have a joint briefing, particularly when you have these sets of ministries, Ministry of Finance, the NDRC, and the PBOC all together in one briefing, markets will tend to run with that. It's showing up across some of the car-related companies and also the appliance makers, which will benefit, of course, from the trade and policies here.
Yeah, well, that was what was announced last week, that they're going to be expanding it because we've had sort of the cash for clunkers program so far, but it's been more focused on white goods. And, of course, one of the key things that's come out of that is, how often do you really replace your white goods? They need to also expand it. And so, yeah, that's what we're really waiting for, just some key details of that, the types of devices and the sort of incentives that could be in place. But the market reaction we've already seen we saw it last week as well. Of course, how long this lasts and the sort of knee-jerk reaction it could end up being as well is another question, because we've seen markets rally in anticipation of these sort of major policy meetings, but then the enthusiasm can sometimes fade a little soon after that.
Yeah, there's a philosophical question for you. When was the last time you replaced your washing machine?
It's 11:29 a.m. in Tokyo. Japanese markets just about to go onto their lunch break, and it's a good day for them so far. That's a very good day, actually, for the Nikkei 225. But put it in perspective, because overnight it was that big story around Nvidia rallying ahead of this keynote speech that's maybe about to start with Jensen Huang at CES. But the story here is, of course, the major beneficiaries of that trend that are in Japan.
Like Advantest, Tokyo Electron, some of the names, of course, that we were tracking going into the lunch break here. And on top of the micro lifts that this benchmark is getting, of course, keep in mind we did pull back yesterday, catch down trade, there is catch up, so we are back at 40,000. On top of that, and I think we've also not touched on this as much, is the BOJ meeting is certainly live, but the conversation in markets right now is maybe Ueda-san has not done as much to tell the markets that it is live. So you have a weaker yen trading at 158. You do have, of course, equity markets that tend to rally. And, of course, you have the yields that have been pushing higher globally, not just in Japan, but we're back to 2010 highs on the 30-year yield. Right. Nippon Steel. Right. Well, I mean, you guys have been following the story. I think let me just recap this for you very briefly. Despite the hurdles in place, look for someone who looks at you the way Nippon Steel and US Steel look at each other. I put it that way. 1.5% to the downside right now after both companies filed lawsuits following, of course, the blockage of that deal. Very quickly, how does this translate on aggregate to the Asia Pacific? 6 cents and 1% on the regional benchmark. S&P futures are up to 6,000. Back to the Nvidia story that Bill was just talking about there. And as far as sector movers are concerned, we're roughly split in between. Although the story, of course, within the Chinese context, just to mention this as well, is a Tencent CATL story. More on that, of course, in a moment there, Mel.
Yeah, we'll start off with Nvidia and really this idea around AI and having been the dominant trend really for the past couple of years. Is it still the same story for 2025 trading? But let's get analysis now and bring in Ho-Yin, Asia Head of Technology and Communications for Investment Banking at Citi. Ho-Yin, thanks so much for joining us in the studio this morning. And for anyone that is really watching the Jensen Huang keynote very closely, we're hearing it's actually starting at in another 9 minutes from now. So we'll get your views on that. But really, AI as the dominant trend, do you think that still stays the story for the coming 12 months?
First off, thanks very much for having me here today. I'm very excited to speak to you both. Look, AI is a key story. AI was very exciting last year. We saw a lot of demand for AI, and we saw a lot of activity across investment banking in Taiwan, as an example, in Southeast Asia across digital infrastructure. We've seen a large number of fundraisings in anticipation of AI becoming much more prevalent. I think this year, what's really exciting about AI is the fact that we're going to be able to use it more. What I like to talk about is the say-do gap. And what I mean by that is that everyone talks about AI, right? All the meetings we have with boards, with senior management, we talk about AI. But the reality is a lot of us have not embedded AI into our daily lives yet, right? Whether it's at work or at home. This is the year that's going to change. And so I think we're going to see a lot more applications. We're going to see agents. We're going to see smaller language models. We're going to just see it become a part of our daily lives. And that is going to be really exciting.
How much more fundraising do you think we'll see this year compared to last year, say?
Last year was very active, right? So last year we saw Asia ex-Japan was $50 billion, with Japan was $70 billion of fundraising. And I think this year we're going to see double-digit growth. A lot of that's going to come from across different markets, right? We've seen a lot of activity in Japan, Korea, China, India, right? It's been very active. One of the great things if we look at 2024 is actually that most Asian indices were up, right, for the year. And so we're quite excited about this year and what it has to bring.
Tying those two themes together, more fundraising, but also the advancements that we see in AI, do you think that a company that's looking to fundraise now needs to have a more developed AI story? Do they need to already be at the point where they're having direct applications, for instance?
I'd say two things. One is that starting from 2 years ago, every company talked about AI and how they were going to use it. I think the second thing is that investors are now looking for what are the real applications? How is it going to drive revenue growth? How is it going to drive cost reduction, right? People are looking for some tangible results. And this is the year we expect to see more of that, right? Companies have been rolling out AI tools in-house, but also for interactions, for example, with their customers. And so we're going to see a lot more focus around, what are the practical applications and what benefits are it bringing to the P&L?
Yeah, I mean, this... should we call it a super trend? Because it seems completely divorced and agnostic of where interest rates are. I mean, the fundraising aside, where the economy's headed, what geopolitics is doing. And I'm wondering, when you talk to issuers and these CEOs and CFOs, what's sentiment like? Do you think is confidence almost concrete and rock solid at this point in time, given what seeming challenges?
Look, AI dominates every conversation we have. Every corporate is focused on how to use it, how to apply it, and how to help with, like I said, revenue, as well as expenses. And so what's important, though, is how do we really roll it out across the organization, right? There's been a lot of talk about it, but for each department, whether it's marketing, finance, customer service, et cetera, how do we roll that out? And this year, we're going to see a lot more of that. I think companies have gotten over the initial hype. But what's really exciting is thinking about how do I actually get tools, right? Even at Citi, we've recently rolled out a number of tools for staff to use. More than half our staff now have access to these AI tools. And I think that it's really important for more of these to come so that we can have some practical day-to-day applications.
In terms of the listings as well, what are you hearing about the appetite for listings, particularly in Hong Kong? We saw sort of a flurry of applications at the end of last year and a lot of paperwork being submitted. But what does the pipeline look like to you?
The pipeline looks strong. I think if we look at last year, there was a lot of activity, particularly around convertible bonds, follow-on offerings, blocks, right? We saw a lot of that activity. Like you said, towards the ends of last year, a number of filings, a number of IPOs. And so I think things are set up for a strong 2025. I think there are a number of IPOs in the backlog, and hopefully we'll be able to get some of those out in the next few months.
Okay, well, what trends are you seeing as far as valuations go? And I asked that within the context of Hong Kong markets. You mentioned most benchmarks in the region closed higher last year, because we had a major pivot point in late September where markets obviously rallied, we pulled back, we haven't quite retested the lows. And I'm wondering, has that change the way companies are looking, how much they can list, at what level they can price, for example, in the equity market specifically?
Yeah. I think corporates and as well as existing investors have become more realistic around valuations, right? We had the highs of 2020, 2021, and there's been some valuation adjustment in terms of where the people are set on listing. That's helpful for markets, right? With realistic expectations, with strong growth, we hope to see a number of listings here in Hong Kong over the next few months.
The challenge, or one of the challenges facing the IPO market here is geopolitics, of course. And overnight, the story was Tencent and CATL being added to a US blacklist for alleged links to the US military. Do you see that sort of denting the IPO outlook at all?
Yeah, look, we've seen this play out over the course of the last few years. I think as we speak to corporates, and this week I'll be in Shanghai, Shenzhen, right? Corporates are keen on fundraising. They're keen on looking for growth. They're keen on both domestic opportunities as well as international ones. And so our dialogue remains extremely strong. I think there's quite a lot of opportunity for companies in China as well as Asia to continue to grow this year. The AI theme is very important. We talked a bit about hardware supply chain, right? So the hardware piece is clearly very important. And I think one thing is we look at there's going to be a big discussion around chips today, as you were talking about. But it's not just chips, right? It's how do you get that AI power to the user, right? And so there's a whole long supply chain which is actually touched on. And we're seeing a lot of activity across that supply chain, not just on the semiconductor piece. I think the second area we've seen a lot of activity is around data centers, digital infrastructure broadly, I should say. Right? We're talking data centers, tower, fiber. Right? There's a lot of activity there because that's the basic infrastructure which is required to get AI to the user.
And is there I'm not sure if this is a geopolitical question, I guess, to follow up with Bell. Have you noticed that certain companies are approaching or avoiding approaching certain types of investors, given the geopolitics, for example? And the reason I bring that up is the Middle East, for example, has become a very big source of business within the Greater China sort of corridor as well. And I'm wondering whether you've seen that in your discussions among issuers and potential investors.
Yeah. As we look at 2024, there was a large amount of convertible bond issuance by Chinese tech companies, right? What's really interesting is there was significant demand from U.S. investors, right? Okay. So that interest level is there. I think the second piece, to your point around Middle East corridor, that is extremely active as well, right? We're bringing a lot of our clients to the Middle East to meet investors. Last year, we advised Lenovo, and who raised money from Alat, which is a subsidiary of PIF, right? So we're seeing different trade flows, but investor interest remains high, given China's the second largest economy in the world.
Okay. I'm almost tempted to ask you about your travel plans, because that's a good indicator, really, of where the news flow is probably going to come from. Ho-Yin will be staying with us, of course, Asia Head of Tech and Communications for Investment Banking at Citi. We're leaving you now with, and speaking of AI, live pictures out of Vegas, where Nvidia's Jensen Huang is set to speak. I believe there should be, well, it is live pictures. I believe that is that the stage or, anyway, looks like something fancy. More on that in a moment. This is Bloomberg. That's not good, is it? I was about to say, markets are turning pretty quickly. So at least offshore, right? So this feels like it's well, it certainly is, not feels like, it is the Tencent story, dragging down 1.7%. Do we have Tencent? We can show our viewers, please. I know what it's doing. I'm going to bring it up on my screen to tell you in case it doesn't come up. So Tencent was down about 5-6%. We're down 6.5%. So that should be session lows on the heaviest weighted stock on the index. There we go. Thank you so much. 1.7 on the Hang Seng Index. We're now down 5 days on the CSI 300, which should actually take us below a key support level, which we hit, which is an intraday low October 18. That's the story there. Thank you so much. 6.5%, 382. We were north of 400, of course, before news broke that they were on the entity list. Now, to also mention other developments that have taken place along the space in the last few minutes or so. So Tencent and CATL have come out and said, nope, we have no ties with the military. SenseTime also says that the blacklist has no actual impact on it, just to get that out there. That is, of course, speaking of the AI theme, one stock that we have been tracking as well, Belle.
Yeah, let's get some more analysis. Bring back Ho-Yin, he's Asia Head of Technology and Communications for Investment Banking at Citi. And I mean, we talk about geopolitics sort of broadly because we see this also functioning in different ways in Asia. And one of the ways that we see it playing out is that pressure on a lot of Taiwanese companies to sort of develop a Taiwan plus one strategy and sort of move into other key markets. And you were just talking about some of the opportunities you're seeing in India right now. Is that linked into that story at all?
Look, I think investors are looking for growth. India is a very exciting story. Last year, we did many deals, many record-breaking deals, right? We did Swiggy, there was Ola, there was Hyundai Motors, right? We did a large number of transactions there, each of which broke a record. We're excited about this year in India. There's a lot of growth opportunity. There's a very strong pipeline, and I think we're going to see a lot of deal activity there as well. Across the region, actually, as we think about other markets like Korea, Japan, there's going to be a lot of activity. I think one of the interesting things in Korea is, 10, 15 years ago when I went, you'd always meet the large conglomerates. Now, actually, you meet a lot of new companies, new startups, private unicorns. And so there's actually a real ecosystem which is developed there, which we are very excited about.
Well, talk to us a little bit more about that. What specific sectors and areas seems newly active in the Korean market?
Look, across the different tech sectors, whether we're talking about internet, whether we're talking about fintech, whether we're talking about e-commerce, there's actually a lot of activity that's been going on. We've seen fundraisings happen over the course of the last few years, and I think with time we will see more activity, more fundraising, as well as M&A opportunities as well.
And more equity or more debt?
Both. We expect to see both. And the great thing about Citi is that aside from investment banking, we of course offer corporate banking as well as commercial banking services. So in addition to equity and debt, we're talking about cash management, FX, lots of other services that we offer to our clients in Korea and around the world.
Talking about Korea specifically, I mean, we saw that major slide last year in the benchmark, and that was really down to the Samsung story and the perception that they were behind in the AI race. So do you see promise in that area in Korea specifically? And do you see also different types of tech companies as well, beyond sort of memory chips that a lot of people would associate the country with as well?
Yeah. The hardware supply chain there is really strong, right? So you're talking, there's a number of companies there which have been grown very large and supply into the semiconductor supply chain. AI is clearly a big theme, right? We've seen lots of companies perform very well that touch on AI in the semiconductor space. I think importantly, though, is that it's not just about semis and hardware. We are seeing new businesses, new business models, right? Like I said, e-commerce, internet, and others. We have seen a large number of companies become significant unicorns and actually list over the course of the last few years.
What about Japan as well? What's the market looking like there this year?
We're excited. We're going to see a lot more activity, right? On one hand, there's equities, but on the other, I think M&A as well. There's a real focus on shareholder returns. That we've actually seen not just in Japan, but across other markets in Asia as well. But shareholder returns is a big focus. And I think because of that, we're going to see a lot of corporates take different actions, whether it's acquisitions or divestitures.
Is there anything else that you're watching out for this year? I mean, just talk through your top themes here. AI, of course, is standing out, and there's different opportunities in each region. What else should people be watching for?
I think AI is extremely important, right? That really is one of the dominant topics that we've been discussing. I think on top of that, it's really company specific. Every company wants to grow, whether it's in the domestic market or overseas. As we were talking about Korea, many companies in Korea want to go overseas as well, right? They want to take advantage of the popularity of K-culture, let's call it, and grow. And so we're going to see a lot more outbound activity as well, whether it's from China, India, or other parts.
Yeah, I just finished Squid Game Season 2. Wasn't as good as the first season, just to mention that as well. There's another way of asking this question. Are you hearing anything on a potential Didi listing in Hong Kong this year?
Look, I don't. Let's see.
Okay, there we go. Hashtag, put it together. Thank you so much for the time. Very, very busy there, of course. Ho-Yin, Asia Head of TMT, banking, investment banking, of course, at Citi. And almost right in cue, thank you so much, Jensen Huang, on stage now. Let's listen in to the big game.
Gary Shapiro. I'm in Las Vegas after all. If this doesn't work out, if all of you object, well, just get used to it. I really think you have to let this sink in. In another hour or so, you're going to feel good about it. Well, welcome to Nvidia. In fact, you're inside Nvidia's digital twin. And we're going to take you to Nvidia. Ladies and gentlemen, welcome to Nvidia. You're inside our digital twin. Everything here is generated by AI. It has been an extraordinary journey, extraordinary year, and it started in 1993.
Ready, go!
With NV1, we wanted to build computers that can do things that normal computers couldn't. And NV1 made it possible to have a game console in your PC. Our programming architecture was called UDA, missing the letter C until a little while later, but UDA, Unified Device Architecture. And the first developer for UDA and the first application that ever worked on UDA was Sega's Virtua Fighter. 6 years later, we invented, in 1999, the programmable GPU. And it started 20 plus years of incredible advance in this incredible processor called the GPU. It made modern computer graphics possible. And now, 30 years later, Sega's Virtua Fighter is completely cinematic. This is the new Virtua Fighter project that's coming. I just can't wait. Absolutely incredible. 6 years after that, 6 years after 1999, we invented CUDA so that we could explain or express the programmability of our GPUs to a rich set of algorithms that could benefit from it. CUDA initially was difficult to explain, and it took years, in fact. It took approximately 6 years. Somehow, 6 years later or so, 2012, Alex Kershevsky, Ilya Sutskever, and Jeff Hinton discovered CUDA, used it to process AlexNet, and the rest of it is history. AI has been advancing at an incredible pace since. Started with perception AI. We now can understand images and words and sounds. To generative AI, we can generate images and text and sounds. And now, agentic AI. AIs that can perceive, reason, plan, and act. And then the next phase, some of which we'll talk about tonight, physical AI, 2012. Now, magically, 2018, something happened that was pretty incredible. Google's Transformer was released as BERT, and the world of AI really took off. Transformers, as you know, completely changed the landscape for artificial intelligence. In fact, it completely changed the landscape for computing altogether. We recognized properly that AI was not just a new application with a new business opportunity, but AI, more importantly, machine learning enabled by transformers, was going to fundamentally change how computing works. And today, computing is revolutionized in every single layer, from hand coding, instructions that run on CPUs to create software tools that humans use. We now have machine learning that creates and optimizes neural networks that processes on GPUs and creates artificial intelligence. Every single layer of the technology stack has been completely changed. An incredible transformation in just 12 years. Well, we can now understand information of just about any modality. Surely you've seen text and images and sounds and things like that. But not only can we understand those, we can understand amino acids, we can understand physics. We understand them, we can translate them, and generate them. The applications are just completely endless. In fact, almost any AI application that you see out there, what modality is the input did it learn from? What modality of information did it translate to? And what modality of information is it generating? If you ask these three fundamental questions, just about every single application could be inferred. And so when you see application after applications that are AI-driven, AI-native, at the core of it, this fundamental concept is there. Machine learning has changed how every application is going to be built, how computing will be done, and the possibilities beyond. Well, GPUs, GeForce, in a lot of ways, all of this with AI is the house that GeForce built. GeForce enabled AI to reach the masses. And now, AI is coming home to GeForce. There are so many things that you can't do without AI. Let me show you some of it now.
Right. Jensen Huang today, of course, delivering the keynote at CES in Vegas. From that story to another across the Pacific, here in the Asia Pacific, particularly in Hong Kong, the sell-off is gaining traction with the Hang Seng Index now down nearly 2%, if not already at 2% as I speak. The Hang Seng Tech Index has taken out that threshold just a couple of moments back, and really Tencent is at the very core of the sell-off today. We're down about 7% now on China's most valuable company, certainly a lot less valuable today, give or take, what is this, about a $35 billion US dollar hit. We're looking at a key support level, which is, we'll see how we close, but currently we are below that level for the very first time since the policy pivot. We'll see. Focus on the 100-day moving average on the Hang Seng Index. We're going into the last 60 minutes of trade in a morning session, and of course the last 30 minutes in the onshore markets. Markets are selling off. That's a China story. The rest of the region is doing rather decently. This is the China Show.